everyone. You're watching The Money Show, the only show where we talk about your personal finance, we talk about your investments and help you align all your investment strategies with your financial goals. That's right. We also do your life financial planning. So just in case you have to send across or you need any expert advice from us, just send across your questions. The WhatsApp number is flashing on the screen, and you can also email us your questions. Give us the details of your existing investments, and we will help you strategize the right strategy, or we'll help you identify the right kind of investment instruments for all your financial goals. And that's what we do on this show. I'm Kavita Thapliyal, and let's begin. And today we are joined by Ashish Gupta, Chief Investment Officer at Axis Mutual Fund, to get insight on India's equity markets outlook, earning growth expectations for FY27 and the quarter earnings that are going on, structural drivers shaping investment trends in 2026, a very important part of the conversation. Gupta has recently commented on a lot of heavy equity supply on market returns and highlighted key themes including earning growth, sector opportunities, and broader economic drivers. So let's dive into the factors influencing market valuations and where he sees opportunities and risk ahead. Ashish, hi, evening, and welcome to the show. Great to have you. And it's going to be a conversation where investors are going to get a lot of takeaways from you. Okay, so let's begin and let's talk about market outlooks and supply dynamics that's been in headlines. You know, something that you've really explained very well. So just for my viewers, earlier you said that there's heavy equity supply, including IPOs and pre-IPO stake. We just want to understand, what is actually happening. You said that it could keep a lid on market upside, making a runaway market unlikely. So how should investors understand this? And at the same time, very important, Ashish, how can they calibrate expectation around returns in such kind of environment? Because there's so much of noise going on, and you highlighted really well.
So, Kavita, I think we have all seen the structural growth that has come through in the Indian equity market for the last 5-7 years. And the underpinning for this had been the fact that domestic flows have been very consistent and very robust, right? If you see, even through the volatility over the last 6 months, retail flows, including through mutual fund and the SIP amount, has continued to be strong. Now, investors should not take this to a conclusion that as long as these flows remain strong, market will only continue to move up. Market has multiple number of participants. Every market has two aspects. There are buyers and there are sellers, or as we say, there is a demand in the market and there's a supply in the market. And what we have seen in the last 2 years now, that as the demand has been strong because of strong domestic flows, we have also seen an increase in supply. We have seen an increase in supply in terms of the IPO market, and we have seen increase in supply in form of promoters and private equity selling down their stakes. And now for each of the last 2 years, the total amount of the supply that has come into the market has exceeded the domestic inflow. And if I kind of put numbers to it, last year there were almost 100 IPOs. That's in right. 2024, there were about 91 IPOs, and they have raised about 170,000, 180,000 crores from the market. And in addition to that, promoters and private equity have sold another 3 lakh crores of stock in the market. So there has been 5 lakh crores of supply that came into the market. Therefore, what this means is that even though the mutual fund inflows are likely to be more than 3 lakh crores, the market felt the pressure of the supply. Right. And last year, as you know, FII flows also turned negative, and that meant the broader market did not provide return.
That's right. That's right.
If we look in the Nifty, I think Nifty last year ended reasonably well. Nifty was up about 10% for the year. But if you look at the median return in the market, that was actually negative 4%. And if you saw the small cap index, it was actually down about 6%. Because a lot of this supply actually came in the mid cap and the small cap stocks, not so much as Nifty.
That's right.
This year, we are seeing already with SEBI, more than 1 lakh crores worth of IPOs have been filed. And what we understand from bankers, there is a pipeline of a similar such number, which is going to be filed soon. And this year, there are, as you know, several large IPOs that are also coming to the market. So that is what investors should be worried of, that it will kind of keep the demand-supply equilibrium tight. And therefore, we don't expect a year of strong returns for the market.
Exactly. You're right. It's a large pipeline again expected in 2026. So in terms of valuation, Ashish, I just want to understand, how will this supply impact valuations differently for large caps versus mid and small caps now?
Sure. So I think one of the reasons for the large supply is that the market valuations had moved up. Right. And that kind of makes it attractive for the people to take profits, particularly private equity, who typically has been invested in these stocks for 3-4 years. Similarly, if a public company is trading at a higher multiple, a private company feels that they should also kind of tap the market and enjoy the high multiples. Now, because a lot of supply came in the mid and small cap stocks, we had great year for mid and small cap returns in 2023 and 24. So the multiples in the mid and small caps went to a premium over large caps, and we saw a large amount of supply that came in the mid and small cap bucket.
That's right.
When new companies come to the market, typically they price at a discount to the existing market multiples, and therefore the market participants who are invested in these stocks shift to the cheaper alternative, potentially, which is coming from the private market. Right? And therefore, this brings down the overall valuation in the market, which necessarily is not a bad thing, because the counter argument can be that if this supply was not there, the market multiples or valuation multiples of many of the mid and small caps will be very, very frothy.
That's right. Now let's shift the conversation towards specific sectors. So in your view, which sectors are poised to perform in 2026 now? Because definitely investors need to taper down their expectations, something that we've been talking about already from 2025, and looking at the geopolitical tensions and the FIIs going away, specific sectors will definitely lead the market. Now, there are obvious ones like financial and consumptions. Now, you've previously also mentioned specific sectors also may be taking charge. So what would that sectors be, and overall, what's on your radar?
Sure. So I think you rightly mentioned that both financial and consumptions continue to be key themes.
Right.
We have seen credit growth pick up sharply over the last 6 months, from about 8-9% to, I think end of December, it had reached 14.5%. There has been monetary and regulatory easing that has helped this. And both banks and NBFCs are beneficiaries of this. We are seeing credit costs for some NBFCs that had gone up last year due to microfinance or unsecured loan stress also coming down. So in that segment, we are seeing a big acceleration in earnings growth this year. So I think financials continue to be beneficiaries. Auto sector is one that kind of is at the intersection of both of these, consumption as well as financial, because auto demand is a beneficiary both of the rate cuts as well as of the GST rationalization. Since September, October, we have seen pickup in passenger car and two-wheeler demand, and we are seeing now the cycle turn favorable even for commercial vehicles. So I think incrementally the CV cycle is also looking better, and we are seeing an upswing there.
Okay.
On broader consumption, in the second half, we saw recovery starting to come through in rural demand. Urban demand had been uneven but picked up after the GST rate cuts. And we believe now there are some pockets of discretionary consumption that have started to show an improvement. But it is not a very broad-based consumption pickup. There are pockets which are seeing some revival, but pockets like retailing which continue to be much softer than expected.
Then with that, it's time up on the show. Thank you so much, Ashish, for joining in and helping our viewers navigate all the kind of market volatility, news and earnings as well. Thank you so much. And with that, it's time for a short break on The Money Show. We'll be right back.